In this video, I will show you a very simple but highly effective trading strategy with one of the most accurate indicators on TradingView. The strategy shows great results on lower time frames, so if you're a day trader who wants to make quick and consistent profits, this strategy is exactly for you. Okay, let's get straight into it. The strategy I want to show you is based on a contrarian style of trading. If you don't know what that is, it's basically when you go against the prevailing sentiment in the market. So you buy when everyone else is selling, and you sell when everyone else is buying. This style of trading is quite risky, especially if you're not well versed in it. However, the strategy I'm about to share with you in this video carries minimal risk and is highly reliable for trade entries. As an example, we will use the Bitcoin price chart on a 5-minute time frame. The strategy includes two indicators. In order to add the first one, click on the Indicators tab and search for EMA. Pick this exponential moving average that you can see on the technicals. Open the settings and change the length to 200 as well as the color to white. This is an essential trend filter that you need to have on a chart. The general rule says if the price is above the EMA, you're only going to be looking to buy. If the price is below it, you're only allowed to take short positions. For the second indicator, we will use the most popular premium tool created by LuxAlgo. Just a quick heads up, this video isn't sponsored by LuxAlgo. However, if you decide to give it a try, just make sure to use my link to save up to 50% with an annual subscription. And they have a 30-day refund policy, so you can test these premium indicators literally risk-free. Okay, once you've added this indicator to the chart, access its style settings and disable the exit signals. Then head over to the inputs and change the signal mode to contrarian plus exits. The bar colors will also change as a result. Lastly, uncheck the dashboard and enable the reversal zones. Alright, now before we get into the trading rules, I want you to understand how this indicator and the signals work. And let's start with this buy and sell signals. The contrarian signals by design go in opposition to the current trend and aim to deliver extremely fast decision timing. More simply put, contrarian signals aim to spot potential tops and bottoms. The advantage of contrarian methodologies is that they are less subject to lag than most trend-following methodologies, thus allowing for potentially higher profits. The contrarian gradient color mode for the coloring of the candlesticks is based on the contrarian signals algorithm. Stronger green colors indicate an oversold market and a potential reversal, while stronger red colors indicate an overbought market. The reversal zones show us one upper and one lower zone. Each zone is designed to help us find tops and bottoms whether the market is ranging or trending. Alright, let's dive into the exciting part, understanding how we can use this strategy profitably. We'll start with the rules for entering a buy trade. As we previously learned, we are only allowed to buy when the price is above the EMA. Rule number 2, the price needs to pull back either into the EMA or the green reversal zone. The third condition, a buy or a strong buy label must be printed below the price bar at the time the signal is issued. The price must remain above the EMA. If it closes below the moving average, the signal is cancelled. And finally, to confirm the market's volatility, check the position of these reversal zones. Notice the fact that when volatility in the market is high, the reversal zones are usually far apart. On the other hand, when volatility is low, the bands are really close to each other. This indicates a sideways market, which you should avoid at all costs. Once you have all the rules in place, open a long position at the close of the price bar. The stop loss will be placed at the green reversal band. Target at least a 1 to 1.5 risk-reward ratio. You can even exit a long trade manually once you receive a sell or strong sell signal from the indicator. Okay, here is another example of a buy trade. Watch how the price respected the EMA. We see that all the conditions were met. The opposite is true for short trades. First, the price needs to pull back either into the EMA or the red reversal cloud. Second, a sell or strong sell signal must be printed above the price bar at the time the pullback happens. Finally, check the reversal zones and make sure you do not enter the trade when the bands are close to each other. Apply the same money management rules as for long trades. If you follow the rules I just showed you, you will be surprised how well this strategy works. So definitely give it a try. If you're looking to take your trading to the next level, be sure to give the Lux Algo Premium indicator a try, and don't forget to click my link in the description to get up to a 50% discount using annual payment. If you want to learn my best strategies for trading forex, stocks, and crypto, check out one of these videos.